Welcome to the Smart Property Investment Show, the podcast by investors for investors.
G'day, how you going? It's Phil Tarrant, host of the Smart Property Investment Show. Hope you're well. Recording in December as we get ready for the Christmas break. And sort of, you probably hear me talk about this a bit. Sort of a time I use, like a lot of people do, and I know a lot of people do it structurally to think about their property portfolio and planning for the year ahead, and some of them might be sort of more soul searching for people trying to work out the whys of the world. For other people, it might be a little bit more strategic, how they're going to actually shape their buying and the direction that they're going to be taking their portfolio. And for other people, it could be very tactical, as in the things that they need to do over the course of the coming year to propel their portfolio in the right direction. It's probably where I'll be spending a lot of my time. Those little bits around the edges, trying to get on top of my administration, and a sort of just a catch-all for everything that's to do with managing a portfolio and managing it quite well. So use the time. Don't bite off more than you can chew. Be a hot tip. Jump in, spend an hour, read some books, do all that sort of good stuff. Tune in the podcast if you've got time, walking the dog or at the gym or mowing your lawn. Use the time effectively. It's the beauty of podcasts. It can help you inform yourself and shape your decision making. Fortunately, we get to share a lot of stories of property investors on this podcast. It's very much the heartbeat of this podcast. And I think we're probably even nearing 10 years of recording this, which is a bit sad, thinking that a lot of people think podcasts are quite new. We've been doing this for a long time, and podcasting, though, is still very new. I was only seeing a thing the other day that the most recent election in the US, they're calling the first podcast election. So podcast being a key mechanism for shaping opinions and how people consumed knowledge. So certainly property investment is being shaped by podcasting, and there's a lot of really good property podcasts out there, and this being one of the originals. We speak to investors, and often those investors end up working in property. I think that's going to be the story we find out today. Tim Watson joining me in the studio, property investor first, now buyer's agent.
Indeed.
Brickstowealth.
Yeah, I think you're absolutely right, Phil. It is a tried and tested path that I've certainly trodden.
Yes.
Absolute passion for property investment. And I think, as we've talked about, having gone from working in pharmaceuticals for over 20 years to now becoming a property strategist and buyer's agent and just doing what I absolutely love. Yeah.
Okay. Well, I want to work out why you love it so much and why you're so passionate about property, but you got a funny accent.
It's not the first time that's been said.
No, it's a familiar accent though.
It certainly
I'm trying
is.
to pick it.
I'm from over the pond.
Yes.
Yes. So Newbury, Berkshire.
Okay.
Southeast of England.
There you go.
And look, I've been here since 2006.
Wow.
But haven't lost the Pommy accent.
No, it's probably softened quite a lot. But Southeast England, it's you don't have too coarse my wife's English, so I'm quite familiar with the Poms.
Well, that's it. Both my parents are Scousers.
Okay.
So if I had a Scouse accent, then it'd be probably quite difficult.
There'd be a problem.
To understand me.
Scousers are some of the best property investors, though.
Well, some of the best property investors, and Liverpool being the best football team in the world.
Yeah, well, maybe. I had a joke there about maybe it's a bit inappropriate, but I'll say it, is one of the greatest assets to Liverpoolian property markets was during the 1940s. You actually get to rebuild it and make it a little bit nicer. But we won't go there.
Liverpool's come a long way.
Liverpool's got a long way. I like Liverpool. Liverpool's great. I spent quite some time in Manchester living when I was a younger guy, and we used to get out to Liverpool a fair bit. So
I haven't really been there, but I've heard it's a great place to head out.
It is. But how long have you been in Australia? 20 years or so?
Yeah, coming up to 20 years. So we arrived in 2006. My wife and I.
So you come out here already married?
Yes, correct.
Okay.
Married for a year or two.
English, Aussie?
Czech.
Czech? Okay.
Yes, my wife is from the Czech Republic.
Great. All right.
So yes, we came out here. It's the tried and tested path, the quality of life.
Yeah.
I actually backpacked around Australia when I was 18 and loved it. And I knew what a wonderful place Australia was to live. And so having lived for many, many years back in England, we decided we'd come out here. And we now have two little Aussies, two boys, and the quality of life it's exactly what you would expect. The ability to get out, play sport, big soccer players. Yeah. Wouldn't think of a better place.
So that time backpacking orientated yourself to say, this is where I want to end up. So you work towards that as a goal to actually get back to Oz.
So I was very lucky in that my father actually worked overseas a lot, so I've lived in many different countries, and I got the travel bug from that. So, yeah, at 18, rather than go straight to uni, me and a mate jumped on a plane and travelled around the world.
Yeah.
And Australia, we spent 5 months. We actually hitchhiked all up and down the East Coast.
Old school.
And phenomenal. Like,
Yeah.
I have to admit, I don't know if I'd like the kids hitchhiking around, but what
It's
a
called
way
an
to
Uber
meet-
these days.
Yeah, well, that's it. You're absolutely right. But what a way to meet different people.
Yeah.
It was phenomenal. And
Okay.
yeah, saw a large part of Australia and loved it.
Loved it. And then 2006, you arrived back here.
Correct.
And did you have a profession then, or did you sort of
Well,
try and make it up on the way?
Yeah, it's a good question. I worked in pharmaceutical back in England.
Yeah.
And so when I came over here, my wife and I had the plan of worst case scenario, it's going to turn into a 6-month holiday. Best case, and I started, looking for roles. We'll settle down, get jobs, and that's ultimately what happened. And so, yeah, I was in pharma for over 20 years in total, and great industry. Worked with many, many wonderful people as well.
But probably now happy to be out of it doing something else.
That was the passion has always been. So one thing I was trying to do while I was working in pharmaceutical was take control of my retirement plan. And I always saw property as a wonderful vehicle to achieve that. And so I started building my portfolio, probably a little bit later than I should have done, actually. But I have an absolute passion for property investment personally. And so, yeah, when I got made redundant at the end of 22, rather than jumping straight back into pharma, which, to be honest, would have been the easy thing to do, I decided to take the risk and follow the passion.
Yeah. Oh, I look forward to learning how you got there. But property investment being the catalyst for shaping sort of, Tim Watson 2.0, life after pharma.
Correct.
When you probably could have maybe stopped. I don't know much about your portfolio, and we'll discover that, but you've gone, make passion your paycheck is one of the things, and you've gone about doing that, probably leveraging a lot of the skills that you have out of pharma, which probably you're only realising now that you're doing something very different. And I've had a lot of mates work through pharma, and it's a really good training ground to develop some really good skills, whether it's selling or whether it's influencing, people to the outcomes that you want. So how far through your career in pharma before you bought your first investment property? I imagine you bought a principal place of residence first and thought that's your great Aussie dream to probably pay that off and retire?
Absolutely.
Yeah.
So we actually, when we arrived, we were very lucky. We found a flat in Eagleby
Oh, nice.
on Waruda Street,
Oh,
literally
really?
overlooking, on the harbour, overlooking the Opera House.
Yeah.
And so we spent a year there, and just an incredible place to live.
Were you on Laffer, was it?
Yes. I was. The good old living away from home.
I know Kirribilli and like Lavender Bay and Mossman and all those places. Rental markets collapsed after they got rid of Laffer.
Interesting.
Because all the POMs they moved out. They went, I can't afford this anymore. Yeah. So anyway, Laffer.
There you go.
Yeah.
So absolutely.
Yeah.
Unfortunately, that was only for the first few years, but it was wonderful.
How'd you find it? Good?
Living
around there?
in Kirribilli?
Yeah.
Phenomenal.
Yeah.
I mean, it's a wonderful, it's a very funny place. Being that central to Sydney, it's got such a lovely village atmosphere. You can literally jump on a ferry. You've got Luna Park down the road, get into the city in 5 minutes. Wonderful place to live.
Yeah, yeah, and I think Kirribilli property markets, rental markets, done really well the last year or so. I saw some numbers like 30+%. I went, sounds pretty high. But so rented first?
Rented first, and look, once we realised we were having our first son, we moved further and further north on each. So I think we went from Kirribilli to Artarmon to Chatswood, and eventually we bought our first house in Turramurra in 2011.
Oh, very cool. Okay, and Turramurra property market's been pretty good as well, right?
It has. I definitely wouldn't complain. Turramurra is not only is it a lovely place to live, but from a property performance perspective, it's been outstanding.
It's been good. So you moved into Turramurra. How long between then and investing in property?
Yeah, so the first investment was actually 2016.
Okay.
And so I look back, and this is, I'm sure you hear this all the time, I just wish I'd moved so much quicker.
Yeah.
And it wasn't for lack of capacity. I think I did what many people do is, firstly, I tried to do it myself, and I didn't really have an understanding of what I needed to look at. I suffered definitely from analysis paralysis, And so it took a long time for me to find what I thought at the time was the right place. I ended up buying a unit in the Gold Coast.
Okay.
At the time, it was probably the worst possible investment. And I can now say with hindsight, with strata implications and everything, the cash flows, it kills it. So I would do things very differently, but at least I got into the market and I did it for the first time.
Okay. And now that's certainly, I would imagine, shaped the architecture you use to supporting your clients through investing in property. And towards the back end of the podcast, we'll sort of drill into that sort of 6 key tips to catapult yourself into a much better property portfolio. So a Gold Coast apartment,
Yep,
probably universally the wrong first property.
absolutely.
And this is one of the reasons why most property investors in Australia only own between 1 or 2 properties, because they buy the wrong property first.
I think it's about 70%, isn't it? Only own 1 to 2.
Yeah. Most.
And look, I was lucky that, firstly, it wasn't that expensive. I think that place cost $175,000. So in the great scheme of things, it wasn't a massive outlay. And more than anything, I did it because I wanted to dip my toe into the water of property investment. Funnily enough, the Gold Coast unit market has actually done very, very well since COVID.
Yeah.
So it's played catch up. But you've always got that opportunity cost of where else would my money have been better placed in 2016? And I've got no doubt I would have been able to find markets that would have performed so much better.
So much better. You still hold that property?
Still got it.
So you've just a bit of a sunk cost and probably didn't get greatest utility out of it, but it hasn't been, it hasn't ended your journey by any means.
Not at all.
So just give us a sense as what sort of size portfolio do you have now?
Yeah, so the portfolio is now approaching 6.5 million.
Okay, not counting your.
That's counting the permanent place of
Okay,
residence as well.
Okay. So what happened after why Gold Coast then? What were the signals that you were being told to invest up there?
Well, exactly. The reality is I didn't look into that much data. The reason fundamentally the Gold Coast, because we'd travelled there and we liked it. And so in addition to it being an investment, it was also, we can also come up here and use it.
Yeah.
How many times do you think we've actually used it?
Oh, never?
Never.
Yeah.
We have never stayed in that place and it's a permanent let.
Yeah.
So you have these great ideas, but in reality it just didn't happen.
Yeah, and a lot of the times people try and have too many masters when making a property investment decision, thinking, I'll use it sometimes, it can be a nice place for a holiday. And often you've got to choose one.
Yeah.
And that is its utility, and that's okay. And you need to be clear about that. So when did you work out that it was a wrong property to buy?
So I think that came with time. And now, I've got 5 different investment properties, but 8 different rentals from that.
Yeah, okay.
And having seen the performance of the other ones, I now look back and think that Gold Coast investment was obviously a poor choice. Plus the fact that I would never buy a unit again. And it's that balance between you want capital growth and it's actually done pretty well.
Yeah.
But from a cash flow perspective, things like the strata, the insurance, all the other costs that come with it, let alone the fact that you don't have the land value that's fundamentally appreciating, that's the reason why I would never touch a unit again.
Well, it sounds like you didn't particularly like the lesson, but it was a good lesson.
Spot on.
Yeah. And being reflective like that, it's okay. Going, look, you've learned from it and sort of accelerate your path. Welcome back, Phil Tarrant, host of the Smart Property Investment Show, chatting with Tim Watson, property investor, now buyer's agent. Are you a buyer's agent first, property investor second, or you're a property investor first, buyer's agent second, or you still?
You know what? These days it's a bit of a mix.
It's the same thing,
because
maybe?
The reason for having gone into my role as a property strategist and buyer's agent is because I absolutely love what I do. I can look back and now say I feel like I've been very successful with my property investment. And so I get a great deal of joy from now helping other clients achieve the same thing. Obviously, at the same time, I'm always on the lookout for what's that next property investment for me and where's the right place to invest to continue to build that portfolio.
So it sounds like you've got a comfortable relationship with probably a data-driven approach to property investment, but also a sort of philosophical ideal of how property investors can best shape the right outcomes. And I can sort of see that emerging from the way that you frame stuff. And a lot of that's come through your own experience, no doubt. So Gold Coast first property. What was subsequent to that. And I want to drill into that in a moment, but I just want to understand the rest of the portfolio.
Yeah. So we then bought a place in Eagleby, 2020.
Okay.
Mid-COVID. And for me, the big change was I actually got a buyer's agent to help me with
So
that.
your second property, you've used the buyer's agent. So have you used the buyer's agent for everything subsequent, or you're doing it yourself now?
So half of the portfolio I've done myself, and half I've actually used a buyer's agent.
Okay. So buyer's agent, good.
So, and for me, that was the game changer.
Yeah.
Because I think we've just talked about the fact that I didn't actually really do any data analysis for the Gold Coast property. It was just I've been there, looks good, let's get into the market. Whereas having a buyer's agent on my side really helped to know that I was choosing the right market based on the right analysis and the right potential that it had. And sure enough, and look, Eagleby, it was a very interesting time.
Where's Eagleby again?
Eagleby is near Beenleigh, so south of Brisbane.
Yes.
And 2020, if you can remember back to COVID, everyone was trying to get out of the market.
Sky was falling in.
Sky was falling in. We were getting into the market. But again, it was a relatively low-cost investment. It was giving us access to a different market. And I could see the potential, and that was actually not only the ability to buy that property, but build a granny flat on top. So it was very much a cash flow play.
Yeah.
And that's exactly what it's done. If I look back, Eagleby has performed incredibly well. In fact, that whole sort of Brisbane corridor has done incredibly well.
Yeah.
And I remember, I mean, from listening to the podcast, funnily enough, by the way, I should thank you, because one of the reasons I got into property investment was when I was working at this pharmaceutical company, someone told me I should get into podcasting. And because I had this interest in property, I started listening to the SPI show.
Oh, okay.
And I can remember many times there was that talk about when's Brisbane actually going to start performing.
Yeah, I remember back in that time, because I had a lot of property. I still have it all largely up there, I think, from back then, and expecting, well, assuming that I was going to see the same things we saw in Sydney in those sort of 2012, 13, 14, 15, going, Brisbane, we're waiting around for it. And you know what? It happened just a little bit longer than than what was expected.
Probably took a year or two at least, longer than people were expecting.
What they're expecting, right? But we were there. You know, it didn't. Maybe missed opportunity cost. Maybe money well spent. Who knows? But I'm probably in similar areas where you are. So Eagleby. Did you put a granny flat on it?
Very quickly.
And that was a recommendation from the buyer's agent.
Yeah.
Okay.
So he'd sourced a plot where we knew a granny flat could be built, and I think it was roughly about a year after having purchased it, the granny flat was up and running. And
was the brief to actually create a cash flow property, or was it
correct?
Okay.
Yeah, very much so.
Yeah.
So that was all very intentional. And I think that's the other thing that sitting down with the BA helped me to do, was strategize where I wanted to get to. And part of it was a capital growth play, but part of it was definitely cash flow. So I wanted to be able to get to the ability to have a passive income which would fundamentally offset the money I was making at the time.
Yeah, which is the goal for a lot of people.
Correct.
Yeah.
That's right.
And the inflection point to go, I'm going to actually use a buyer's agent, was how did that emerge, that idea of going, maybe I should not do this myself, maybe I should use someone?
So education, of which, as I said, the SPI show and the podcast and other podcasts that I'd listened to played an integral part, because I started listening and hearing other people's stories around how they'd built a portfolio. And it became quite evident there were people out there that knew the market and knew how to build a portfolio much, much better than I ever could. And so, and I'll be honest, the cost of paying for a buyer's agent was a big barrier for me and put off the decision for many, many years. But it got to the point where I just thought, if I don't do this now, I'm probably going to regret it, and I don't think I'm going to be able to build my portfolio as quickly as I need to. So
the shift of attitude from you to, I can sit here and procrastinate and keep procrastinating, not move ahead, to it's time to do it. Was there one sort of flashpoint where you went, that's it, I'm calling up someone and I'm going to move?
Yeah, well, that was it. I can remember listening to some of the podcasts, and then I actually called some of the buyer's agents on the back of that, just to understand a little bit about how they worked, and basically snowballed from there.
Yeah, okay, good. So what was the next investment from there?
So I then, funnily enough, from that this is where things can sometimes fall in your lap. But from that Eagleby one, I started talking to one of the the person who's in charge of the granny flat build. And I just said to him, look, if you come across any potential opportunities, then let me know. And there was an opportunity. And again, so this is up in Cooloola Cove. Very interesting property in that it already had 2 houses that were separately rented. So again, it was another great cash flow play. And I felt there was opportunity in the market. It's done pretty well, but more than anything, cash flow has been fantastic for that. So that one I sorted out myself and did all the due diligence around that.
Yeah.
Then place in Glenfield Park, that was through a different buyer's agent.
Okay.
So I wanted to get some experience of working with different buyer's agents to understand how they differently worked. And that was one thing that really surprised me, was how different buyer's agents can have such a different approach. And that property was Glenfield Park. And again, it had the opportunity to separate out a granny flat from the main residence. And then the final one, or the most recent one, was over in Coodanup.
Mandurah, yeah, South Perth.
Correct.
My geography's right, yeah.
And that has granny flat potential, but I haven't done that yet. And the reason was, for the price we bought it at, the cost of building a granny flat wasn't actually that different. So I didn't feel that there was value in it at the time. I'm now considering it because obviously the property market has boomed over in Perth.
Yeah. So the yield without a granny flat is probably pretty good anyway. You're probably getting 6-7% on it, I would imagine.
Very good. Yeah, it's very good.
And when did you get in there?
2021, I think it was. 21 or 22.
So you've really carried. I saw some numbers from CoreLogic or something the other day, and it's like 35, 40% annual growth in some parts of Perth. It's like
that was an interesting one in that when I look at the socioeconomic factor for that particular area, it's not high.
Yeah.
And the property itself needed $20,000 it basically needed gutting.
Yeah.
And so through the buyer's agent contact, we got some guy in to, I say very quickly, it took longer than we were expecting, but to basically renovate the place.
So like painting and
new floorboards,
haircut and shave,
new flooring throughout the house, new kitchen, painting, new bathroom. It was a lot of work. But still, I look back and think 20 grand for that.
You got that for 20 grand?
Yeah, 20 grand was a steal. I don't think you'd be able to do it now.
No. Good luck finding the trades.
Well, that as well. And he was brilliant.
Yeah.
So that was one where I was happy to take the time at not being rented to get it all done up. It's now getting great rental. And it's got the potential for granny flat.
So sort of speaks. What sort of flooring did you put down, like vinyl planks and stuff?
Just laminate
flooring.
Yeah,
what about the kitchen? Did you get like a caboodle kitchen out of Bunnings or something or other?
Yeah,
put together by the handyman. Yeah. So it can be done.
It can be done. It's about, more than anything, it's about having the right contacts.
Yeah.
Because I think whenever you do this kind of thing, you're just hoping that someone's got someone that they trust and they've had good experience with.
Yeah.
That's often the biggest challenge.
Yeah, you need reliable people. It's really key. And in many ways, this is the things that buyers agents do that often aren't talked about is access to knowledge and capabilities around renovation projects. I remember when I started investing, the whole thing was manufacturing equity through renos. And this is like early 2010s, like 12, 13, 14, which was a thing. Like you used to go and spend 20, 30 grand and you'd increase your property value by whatever. Like it doesn't really exist like it used to exist out in the western suburbs of Sydney back then. But it all come down to your ability to access trades and make sure you weren't overpaying for trades. And a lot of people do overpay for trades. You managing your trades is pretty important. You've got to do it well. So that sounds like a really good investment.
Brilliant.
Yeah.
I would think that's pretty close to having doubled, if it hasn't already doubled in the space of 2 to 3 years.
It's not bad going.
Which is incredible. And it's still got, it's got really good cash flow. So there's definitely a theme of my portfolio in, I've wanted the capital growth potential, but I've also been very thoughtful about what cash flow it's going to bring in, and hence trying to find different properties sometimes that have multiple income potential. And so, if I look back, there are no doubt some things I'd do differently, one of which is move much quicker and buy more.
You ask every investor, and I say it all the time, they go, Phil, what would you do different in property? I wish I started earlier, and I wish I went harder when I started because I could have.
Absolutely.
Like, I wasn't constrained really financially. I was constrained through time and bandwidth. So it was never a full focus. It was like, yeah, that's enough. It's enough. I probably could have bought twice the amount of properties I did at that period of time. But, you get conflicting priorities.
Well, and that's it. But I'm thrilled with what I've been able to build. And my son's approaching 17 in a couple of days.
Yeah, okay.
He's also now on the journey.
Oh,
He's
really?
thinking,
Great.
He's really interested in it. And I think that's the next step as well, is helping them to get onto the market, because it's
I reckon
not
that's
easy.
the generational gift that property investing give their children, is maybe a little bit of help when it comes to the dollars and the cents, but it's the mindset and it's the know-how.
Spot on.
And it's the can-do, right? And this is the thing that's, frustrates me a lot when you see it a lot, we're only a week or so after the last sitting of Parliament for the year, and everyone trying to accelerate all these bills through around housing and stuff, and this idea that is incumbent on the government to actually make it democratise the idea of home ownership or buying property, because it's so hard, inverted commas, for younger people to get into property. With the right mindset, young people can get into property. Might not be their ideal dream home, a forever home, the first property. It's a very different version of it, but what isn't spoken about enough is the different versions of property ownership in Australia. The idea is still that everyone's first home should be a 4 or 5 bedroom house in the suburbs that they can build a family in and around. Like, you can start in a unit.
Absolutely. You can start in a unit. Rent vesting is obviously such a big topic these days. And the reality is far more people are choosing to rent in the place that they work and live for lifestyle factors and financial factors. But equally, then they want to get into the property market. And that's the wonderful thing about Australia. There are so many markets that perform at different levels at different times. So there's always a place to invest in Australia. Yeah. The question then is, are you going to be better off actually choosing an investment somewhere else? And
Makes a lot of sense. So this isn't the end of your buying journey. You'll still keep buying and building. Did you have like a long-term goal or vision for your personal portfolio?
Yeah, it's funny. Well, firstly, from a passive income point of view, my goal, and I think 99% would probably say the same thing, was to get to 100 grand passive income. I hadn't given much thought to inflation, and that's something I now model for clients is, are you talking about 100 grand now, or are you talking about 100 grand in 20 years? Because that's a very different thing.
Yeah.
But yeah, my goal was get to 100 grand. I hadn't really given much thought to the capital goal, like what equity I wanted over time. But I sort of felt like as long as I was investing in the right places that had the right potential, that would come with it. And the cash flow element would get me closer to my passive income target and help with the manageability of the portfolio and ability to keep investing. So that's sort of where I'm at. Yeah. There's no specific number that I'm targeting.
And that's okay.
If the right opportunity comes up, absolutely.
You go,
jump on it.
Now you're in the game, you'll find a lot more of the right opportunities.
Absolutely right.
To just for some reason come your way. And I know a lot of buyers, most inverted commas people get into being a buyer's agent because they are a property investor and they go, hang on, this buyer's agency probably shows Lark's pretty good going, right? And they can provide great value to the clients, but also it's because that's what you do every day. You're a lot more dialed in, and these opportunities will emerge. And often you would come across properties which probably aren't right for most people. But if you've got, if you can see if you've got capabilities, if you need to do renos or whatever else, you've got good access to people like that. That's good business if you can pick it up. So you're in the right spot. But I want to speak about these sort of 6 sort of tips that you have, which you can pretty much use as a way to build your property portfolio from scratch, even with or without a buyer's agent. It's universal, right? You can do this stuff by yourself, but I think you're a testament to the point that a buyer's agent can be a real accelerator, and no doubt that's one of the reasons why you have great passion doing what you do today.
Correct. And look, I've built this list. I've thought back retrospectively as to what would I have wanted to know when I first started my journey. And you're absolutely right. This is whether you've got a buyer's agent on your side or if you want to do it individually and by yourself. And if you've got the skill and the time, absolutely no reason in this doing by yourself. But I guess the key thing is you've got to do it.
You've got to do it. You've got to be focused on it. Yeah.
Absolutely.
Yeah, and I sort of get it. I don't really get criticism. People go, oh, Phil, you always thought the buyer's agent, saying use a buyer's agent, all that sort of stuff. Like, I use a buyer's agent for most of my property purchases. Sometimes, because I'm sort of out there a little bit, I'll do some myself. But it works for me for a whole bunch of different reasons. You don't have to use a buyer's agent. You can. Most people still buy investment property by themselves.
Yes.
That's a fact. A buyer's agent can be a great enabler to help people out for a whole bunch of reasons. Busy executives, time poor. You want to prioritise your time elsewhere. I don't want to spend my time when I'm not working looking at properties. I'd rather get someone to do that for me, right? That's a choice.
And this was my personal experience. I was in a busy job and I thought I could do it myself, but to find the headspace to actually do it just didn't happen. And that's why it took so long for me to get into my first investment. So I'm talking about this very much from my own personal hindsight, which I'm sure a lot of people go through exactly the same thing.
They would do. But again, you've got to be conscious enough to make a decision, go, okay, what was the definition of insanity? Is expecting a different outcome doing the same thing, right?
Correct.
No doubt you probably, think about in your property journey thinking you're going to change, it. Nothing ever changes. So you've got to do something about it. So if getting help from a professional, people use a mortgage broker. They're not trying to do their own mortgages or going direct to a bank. And welcome back, Phil Tarrant from Smart Property Investment, chatting with Tim Watson over at Bricks to. Well, why Bricks to Wealth? Tell me about the name.
It was one of those things where I was trying to think about what do I want. I could come up with any company name.
Yeah.
What do I want to embody what I'm trying to achieve here? And at the end of the day, my reason for being a buyer's agent property strategist is to help people build wealth. I'm doing it through property. And so Bricks to Wealth was born.
And it was all available. No one else had it. You're able to get it all. So have you got a website and stuff?
Yeah.
You actually got the website name?
The website, brickstowealth.com.au,
Okay.
is all up and running. I have to admit, it's a bit of a basic website. It does need a little bit of work, and I'm working
People
on that
just
now.
need to find you, right? Give you a phone
absolutely.
call. Are you sort of chatting with all your old farmer mates, sort of going, because there's some big salaries wash around farmer.
Oh, absolutely.
Yeah.
And
And often what I find, you see it, this where the CEO of farmer business, you see it also in other companies, big salaries, but they probably spend all their money, whereas the sort of your middle management and more sort of junior operators are the ones out there creating more wealth because they're just doing things absolutely differently. So, speak to your farmer colleagues because there's a lot of them invest in property, by the way. But,
yeah, they do.
So let's chat through, and this is just so you write these down and you can actually use this as a way to help sort of shape your decision making and how you go about building a property portfolio. Tip 1, start with the end in mind.
Yeah.
That's probably pretty important, I would imagine.
Absolutely, but I don't know if I actually really thought this one through.
No.
And the first thing anyone should do when they're thinking about building a property portfolio is take some time to understand what your goals are. Now, that might be what your passive income target is. It might be if you do have an equity target that you're aspiring to. But you've got to actually have those goals and know about them. And then the question is, how are you actually going to plan to achieve it? And, we were talking earlier about the fact that 70% only ever achieve 1 to 2 investment properties. I am absolutely sure part of that is they've bought the wrong first investment property and it stops the journey. But I think the other is a lot of people go into this without really thinking about the goals and developing the plan.
Yeah, absolutely. And I admit I'm probably more like you. I still don't really know what the end in mind is. I just I sort of know that it'll be okay investing in property, but
that's right.
That's me. And for some people, they probably wouldn't be comfortable with that, or they think that you need a goal and you need to. Well, I sort of know what the goal is. It's to create wealth through property.
Yep.
Build out my ATM. I've got them. And planning, well, I'm pretty structured in how I plan. I just, I don't really document it very well. But, horses for courses.
Yeah. And you just touched on building your A-team. It wasn't something I gave that much thought to when I started the journey. But I now know you absolutely have to have an accountant that understands property.
Yeah.
And you need to have a mortgage broker on your side that's going to be able to help facilitate and get you the best loans. And that isn't always about the lowest percentage that you can get. It's often about the other facilities that come with it, whether it's an offset or other things. But they take away a lot of the pain and suffering in actually getting the mortgage itself and can give you a lot of guidance around it.
Yeah, I completely agree. And you need to make sure your accountant and your broker and your buyer's agent and property strategist all are aligned as well.
Correct.
Because, and sort of accountants are pretty important to it all because if if your finances aren't set up in the right way, you're going to struggle to get financing. And a lot of the way your finance will be set up is whether or not your accountant is serving you as a client with a view towards property investing. And there's a lot of accountants don't specialise in property investing. You'd be surprised that they feel their job is to minimise the tax you pay rather than being an enabler for you to create wealth through property, which means, surprise, surprise, you need to pay tax.
And yet it's so crucial. Like if you get the structure wrong at the start, so whether you're buying in your own name, in a trust, or if you want to buy an SMSF, this is where an accountant gives you the absolute gold of the advice. And if you get that wrong, it literally costs hundreds and thousands of dollars.
It can hold you back. And then when it gets to a point when you think about the end in mind, if that's liquidate your assets and it's in the right structure, it can hurt you a lot when you think about how much capital growth you got. But if you don't have it in structures, which is the most tax effective. And remember, these are the rules given by the ATO. Know the rules. Your accountant should know the rules and play within the rules. It's really important. Tip 2. So data is pretty important. Yeah. So you call it the king and queen.
So this is it. So it wouldn't surprise you that through my journey, I absolutely believe the data is king and queen when it comes to choosing the right market. Now, this also has to be adapted to what an individual or a person's individual goals are. Some people have a preference for cash flow properties. Some people, it's all about the capital gain first, but you need the cash flow to manage it. Everyone wants to try and minimise risk in an investment. And the only way you can really, really understand all of those 3 different variables is by understanding the data of a market. And so you've always got that opportunity cost of where to invest. And as we talked about, there are thousands and thousands of markets around Australia. The data helps to determine which one is really going to help you achieve your goals and choose or is the best opportunity for right now.
Yeah, and any specific data you think is more of the king and queen than others?
Yeah, it's a good question. So I've just pulled out a couple of suburbs as an example. And look, I think we know Townsville has been a hot market for a long time. And I'm sure some people are questioning, well, is Townsville a good place to invest now? And I think the answer is yes, it can be, particularly if you're looking at the next 1 to 3 years and you want that capital growth now. But you've got to be aware that it has moved considerably in the last few years. But I just cut out a couple of bits of data for a few different suburbs. And if you compare West End, which is very central to Townsville City, compared to a suburb called Curwen, which is about 12 kilometres southwest, firstly, from a risk point of view, West End looks like it's a lot more of a risky investment. The capital growth potential isn't anywhere near as much there. Cash flow is quite similar. And the data I use looks at 80 different metrics to help pinpoint these different sort of risk, cash flow and capital growth potential. But just a couple of things that stand out. Firstly, the amount of rentals to owner-occupier ratio. In West End, you're looking at 50%. Okay. Anything over 45% would be concerning. Yeah. So I think it's about 15 to 45 is balanced.
And the base of that is that there's more renters, therefore less pressure potentially on rental properties. Yeah. So that's the colour around the data.
Absolutely. Yeah. And so in Curwen, it's more balanced at 35%. When you look at the stock on market percentage, which gives you an indication of the amount of stock compared to the number of properties in that particular suburb, you're looking at West End, it's 0.55, which again is balanced. Curwen's much tighter at 0.3, which is actually very, very tight stock on market. And then from an inventory point of view, they actually both look quite promising, but the inventory is 0.69 in Curwen and 1.33 in West End. So they're both positive, but very different across the suburbs. And so it's things like that that help pinpoint which suburb should you be drilling down into. So it's one thing to say Townsville is a great place to invest. You've got to get down to suburb level. Yeah,
you've got to get suburb level, and that's where data can help. But again, you've got to sort of know the ground truth as well and actually what's happening on the ground. And no doubt that's sort of connected with your sort of third tip here is the relationship with the agent is pretty important.
Yeah, spot on. So once you've decided which market you want to invest in, an agent should essentially become your best friend. And I don't know if people always view it as that. I think sometimes they feel like the agent is purely on the seller side, and of course they are. Their goal is to sell it for as much as they can. But at the same time, you can get great insights by building relationships with agents into the market, different areas where you might want to invest versus not. But importantly, access to pre and off market properties is crucial. So there's a very large proportion of properties that never make it onto domain or realestate.com. So you've got to take the time to build those relationships with the agent, and then you might actually get access to these off markets where fundamentally you don't have that pressure that everyone knows about it. So your ability as the buyer to negotiate a good deal is considerably improved.
Yeah, and again, you can do all this stuff yourself, but you've got to go and make all those relationships with all those agents up in Townsville, which might be a long way from where you are.
Yep.
And you just can't. That's just not one phone call to create a relationship with them, because guess what? You're competing against all the buyers agents who are probably at them all the time. So
correct.
The buyers agents typically get the pre-market or pre-listing stuff before. If an agent can sell something without having listed on realestate.com, they'll do it every day.
Absolutely.
And the first person that calls probably a buyer's agent who knows got lots of clients who are ready to go.
Very true.
That's what you're competing against. But key point here, and this is your tip number 4, is actually understanding the value of the property to help you actually negotiate a deal. Like, and I know a lot of people do this. They just throw offers all over the joint, hoping that one will stick. And that's sort of one strategy doing it. But geez, you can spin the wheels doing that, and you can piss off a lot of people as well.
You can, and I would suggest it's a very dangerous strategy. In that you might think you're getting a great deal, but you might be overpaying for that property, depending on the land size, depending on the makeup of the property itself. And so, whenever I put a property in front of a client, I put in at least 3 comparable properties, and what it does is it allows us to look at often a similar property, a superior property, and an inferior property, and that gives us a range. We will never pay over that top of that range, because you're immediately then cutting into your equity potential.
Yeah.
But sometimes, particularly in hot markets, it's okay to pay at the higher end of the range as long as you're getting a good property. It's got the cash flow, it's got everything else that you need to achieve.
Yeah. Yeah, and you want to negotiate with confidence, right? Starting at a low ball offer, most agents are going to be dismissive. They've probably got some other offers out there. They're just going to leave you behind, even if you have somewhere to come.
Whereas if you know specific properties in that location, quite recent sales, you can talk to the agent and say, well, okay, you think this is worth 600, but this one down the road sold for 550, and to me it's a comparable property. So can you explain how you're getting the 600?
Yeah.
So it gives you the ability it gives you the knowledge to negotiate. And the other bit to this is, if you are looking to, obviously as an investor, you're looking to maximise your rent.
Yeah.
Agents will always give you a rental appraisal, but the reality is it an accurate rental appraisal?
Those things can change quite a lot.
They can change very quickly. And so you, as part of not only the value of the property, you equally need to make sure you're confident in the rental appraisal you've been given. And so you've got to look at least 3 different rentals that have recently gone out, and what the value was, and does it support the rental appraisal itself? Yeah,
a lot of people, you see a lot in the buyer's agent space, everyone talks about securing under market value properties. There's an argument to say that the value of the property is what you pay for it. That's the market rate for it. And someone will say, it's under market value. Well, maybe it is if ... you do a $20,000 reno. So if you buy something under market value, but you've got to do a lot of work, yes, you're buying the optionality for it being under market value. So be careful of that language. I don't know if you have a view on this.
I do. Yeah. I get concerned when I start hearing people talking about these wonderful ways of buying under market value properties or get these double-digit yields.
Yeah.
To be honest, it concerns me. And it's because I'm so close to the game that I know the reality is, why would any agent sell a property under market value? They're doing a disservice to their client.
Yeah.
It makes no sense.
Yeah.
Likewise, I don't come across many properties that have double-digit rental yields unless they're in Broken Hill or some other mining town, which comes with risk. So I think you've got to be, if it sounds too good to be true, it probably is.
Yeah. The price of the property is what you pay for it, and that's the market value. Like, maybe there's some outliers of like, someone's got to sell this straight away because of this issue. It's got to go today. Yeah, you might generally get something, inverted commas, under the value of what that property would be worth if it went through a usual sale transaction process, right? Like, and there's some outliers around it, death, divorce. Like, sometimes some people just got to offload stuff very, 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 very quickly. Doesn't happen very often.
No, and so you're absolutely right. If it's a distressed sale, you might be able to get a good deal.
Yeah.
This is where you can stack things in your favour by doing the data analysis. Like if you know the property's worth this amount, if you have the agents, the relationship with the agents that's going to give you access to off-market properties, it gives you the ability to negotiate.
Well, that's your point. This tip 5 is the due diligence. That's the due diligence bit.
And this is fundamental. So, I mean, we just talked about Townsville. A lot of Townsville has previously been underwater.
Literally.
And I know this because I've bought up in Townsville for many clients. You have to be very, very careful with what properties you buy. That if you now look at the flood mapping, there's a lot of properties that get impacted by the flood map. And I don't know what you think, but my personal experience is I would much rather steer clear of any property that's had historical flooding or the potential to flood and wait and find a property that doesn't have any issue.
Yeah.
And it can save you hundreds, and I don't doubt hundreds of thousands. Like if your property goes underwater, firstly, your ability to rent it, the work that you have to do to repair it, it could be an absolute nightmare
Insurance,
scenario.
and you always need to think about the sellability of your property, and
Correct.
a property that floods and a property that doesn't flood, most people are going to choose the property that doesn't flood.
Yeah.
It's
And
the
so
reality.
I think due diligence, there's the flooding, bushfire, obviously we need to be aware
big
of.
thing.
What's the level of public housing in an area can actually influence its ability for equity growth into the future. Always do a building and pest inspection. I think anyone would be mad not to, because for the cost of that, you at least get to see beyond what's visible. And the final recommendation around the due diligence is always get a video walkthrough. It's one thing as an investor to look at the photos, but you don't know how recent they are.
Yeah.
It's like a car I bought recently. The photos he took must have been about 5 years old.
Yeah.
So if at least a video walkthrough gives you the reality of what it looks like right now.
Yeah, you can do wonders with real estate photography, and you can put furniture in there and make things look nicer, and that's just reality of it all. And it sort of gets really technical, like doing a pest and building, so you can actually understand what you're getting, but you can use it as a tactical tool for drive down prices as well, right?
Absolutely.
It's and you can structure it into your buy. You can. Yeah, I remember when I used to buy a lot of stuff in Brizzy, for example. You just go, send me a contract. You sign a contract. You put a 0.25% deposit in their bank account, which allows you to control the property.
Correct.
And then you've got all this time to actually work all this out, and you just walk away and get your dough back.
Yep.
It works well.
It's very standard to put in a 14-day building and pest term or clause. And within that time, you get it all sorted. Yeah, absolutely right. Almost every property I've negotiated for a client has come with some money off because of the building and pest, because something inevitably gets found. The question is, how serious is it?
Yeah. And this is the point. I remember, when I've sold stuff up there, they go, this, that, and the other. Go, it's a 25-year-old house. Get used to it.
Yep.
Do you want it or not? I got someone else here that'll buy it for the price that you contracted at. Swings and roundabouts, buying and selling. And last tip, and this is key, because your investor is only as good as how well they perform for you. Finding a good property manager.
Yeah, and fundamental. So if you think of, if we go back to why are you investing in a market around Australia, it's because it's got the potential. A lot of these markets, I know I didn't see any of the properties I bought. I did the numbers, made sure they made sense, and bought them. Property managers are worth their weight in gold in that ability to find the right tenant first and foremost that isn't going to trash your property, all the reference checks that they do, the ability to manage any work that needs to get done. And unfortunately, I've got one property that's needing quite a bit of work at the moment.
You find that.
But also maximising the rent. And I actually find this one's a bit of a double-edged sword. My experience is a lot of property managers actually often try and take the easy route with regards to you only want to increase the rent by 3% or 4%. So that is the one bit where I personally would always do an analysis of what is a comparable property to the one that I own, renting for right now, and how much has the market shifted. And then ideally, you want to get it up to market rent. Now, there's a balance there of if you've got a great tenant, there might be some flexibility around that, and that makes perfect sense.
You have the lower side of market rent, and I have these conversations all the time. Like, property managers are hesitant to push it up too much, and I'm of the opinion that the tenant should pay market rent. Now, the shades of market rent, but they should pay market rent. As a property investor, you shouldn't be renting your property lower than what the market rent is, because why are you investing? Just go, they're a really nice family and they've been really good. That's fine. They can pay market rent.
The other thing is, if that happens for a number of years, you can end up hundreds of dollars per week behind market rent.
Yeah.
And it's then very difficult to get that back because it would take a significant
If you increase their rent by $300 to get back to market, you know, you're ending problems. That's good. No, nice, Tim. Well, I've enjoyed the chat, mate. What do you think? What's been the biggest success for you property investing? If you had to choose what it is, maybe it's the fact that you now got it as a profession, but you know,
no doubt.
Yeah.
So for me, it's been a journey, and there's been highs and lows. I think for me, just actually doing it, like making a decision, buying a place. So buying the first place, it might not have been the right property, but at least I did it and I learned from it. Getting a buyer's agent on board, at least I just did it and I learned from that as well. And so if I look back, I'm thrilled I actually made the decision to do it, because it would have been quite easy to have done nothing. And financially, we would be in a very, very different place to where we are now. If I equally looked back and I looked at what would I do differently, I think we've talked about this. I'd do it much quicker. I would take more risks, and inevitably I'd probably be in an even better place than I am now. But it's all part of the journey. I think you've got to take your wins and your losses along the way.
The journey's good fun. But so Bricks to Wealth, brickstowealth.com.au, is that the best way to find you there? Or
it is. And I'm also very happy for people to contact me via email, which is tim.watson@brickstowealth.com.au. And my mobile number is 0439 165 180 if anyone wants to contact me over the phone.
There you go. Nice one, mate. We'll keep at it. So it's good to see this journey that you're on. It sounds like you're certainly just begun. So I wish you all the best with the business, and keep at it, mate.
Thanks, Phil.
Nice one. Thanks for tuning in. Everyone, remember to check out smartpropertyinvestment.com. There are lots of these sort of stories there of people investing in property for creating what's next, and people's what's next can change quite a lot. And I think Tim's story is certainly like that. Hope you enjoyed that. Social media, Smart Property HQ is where you'll find us. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs, and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.